Chair Powell, the U.S. is going fast and is the driver of optimism in the global economy right now, thanks to 3 pharmaceutical companies, thanks to a lot of fiscal stimulus, and, of course, you and your team at the Federal Reserve. We just got a great jobs report, a record services number. How strong of an outlook of a rebound are we looking at for this year?
So thank you, Sarah. So there are a number of factors that are coming together to support a brighter outlook for the U.S. economy, which looks like faster recovery and economic activity and job creation. I'd point to substantial fiscal support, vaccination now moving quickly and on track to allow a full reopening of the economy fairly soon. We've vaccinated at least over 100 million Americans have had at least one vaccine. Over 60 million are fully vaccinated, and we're doing something like 3 million per day. So that's moving right along. And, of course, monetary policy is still supportive. And we got a taste of what faster progress will look like with the March employment report, close to 1 million jobs, particularly if you add in the revisions for January and February. And we want to see a string of months like that so we can really begin to show progress toward our goals. The recovery, though, here remains uneven and incomplete. The burden is still falling on lower-income workers. The unemployment rate in the bottom quartile is still 20%. There's still 8.5 million people out of work. And this unevenness that we're talking about is a very serious issue. Viruses are no respecters of borders, and until the world really is vaccinated, we're all going to be at risk of new mutations, and we won't be able to really resume activity with confidence all around the world. So it's not only the right thing to do, it's also the smart thing to do, as the Director General just said.
When you think about, Chair Powell, the substantial progress that you'd like to see, you mentioned a number of the economic indicators. Do you pay attention to what's happening with the globe, with what the 3 other panelists were just describing in terms of the speed of vaccinations, the speed of recoveries? They're not doing as much on the fiscal front as we are here in the United States. Does that matter for how fast you're going to start the exit strategy, start talking about tapering and the path to normalization?
Well, so what we've said about our asset purchases is that they would continue at the current pace until we see substantial further progress toward our goals. And that will really mean actual progress. We're not looking at forecasts for this purpose. We're looking at actual progress toward our goals. So we'll be able to measure that. That's inflation. It's also the indicators of maximum employment. I would look at global vaccination as a risk, really, to something to weigh in as a risk to the progress that we are making. So it's something that we track very carefully, of course, and call out as a risk. And by the way, there's a risk here in the United States as well. Cases are moving back up here. And so I would just urge that that people do get vaccinated and continue socially distancing. We don't want to get another outbreak, even if it might have less economic damage and kill fewer people. It'll slow down the recovery.